Gene Inger, this is Sunday before the Apple conference in San Francisco. We're going to have a couple comments on Apple from IngerLetter.com as well as AT&T, because I think that's actually the interesting play in this situation. Apple, as far as the stock is concerned, is a stock we've liked for years, since the $12 area. We've been in it 3 or 4 times since the 3 out of 4 times profitably, since the $70 price level. And I think what might happen here is sort of a double top on the announcement, because now the bar is set pretty high to exceed. And while I do think you will have a good Generation 2 product from Apple, I don't think that's exciting too many people at the moment that are existing Apple fans and customers, though it may, if the price point is low enough, bring in new customers. So that in and of itself is going to be interesting. I think that Apple remains the premier technology company of our genre, but at the same time, I believe that from a stock market perspective, like happened before, you could run it up and you could even have a significant $20, $30 pullback before you start trying to move higher later on. As far as the product itself, I don't know if they can revolutionize communications as they did the last time, but the bar has to be raised because now the imitators, the wannabes, the others are coming along to a certain degree, and I think it's going to be a sort of a hard mark to hit. But at the same time, if we take a look at the other half of the relationship, which is AT&T, we see a company that has come back from being, in many areas of the country, regarded as a mediocre cellular carrier to actually the highest of the high-tech carriers in North America, in the opinion of some, particularly with the HSDPA 3G system. And I think the iPhone has helped them quietly engage in this transition without most people being aware of it. So I think AT&T has played this extremely well, and I think that while the stock on a short-term basis is on a sell, if it does drop down to the low to mid-30s, we may, we'll let you know, have interest on the buy side once again at IngerLetter.com. Now, having been the only service and the top ranked, if I may mention, in all humility, of 16 on the Blue Ribbon panel at the end of 06, calling for the low in 07, calling for a distributional situation, calling since early 07 for stagflation, and before the middle of 07 for a liquidity crisis and credit squeeze. So basically, we are in a situation where the next major move we will look for is going to be on the buy side of the ledger. But we are not there yet. And as we look at the Dow Jones Industrial Average, which has been held up by a lot of energy and export stocks while distribution has continued beneath that, while some smaller mid-cap stocks have firmed, the near 400-point decline on Friday sets us up, as we discussed at IngerLetter.com, for the completion of the wave down from the expected top in early to mid-May, which was after the projected rally from the March W bottom low, to retrace what had been lost, but set up the next phase of decline, not rally. We are not particularly enthusiastic about coming out of the situation without the recession that many talk about, and we point out that many people fail to know that even in the depression, more money was lost in real estate than in stocks. And credit availability and property is the key to what happens going forward. For more of our discussion on this subject, please visit us at IngerLetter.com. Good afternoon.